Well, we all know that it was the IT stocks which led to the correction of Jan 2022. This is the daily chart of the Nifty IT index in front of us, and if you can clearly see that from the top of 4th of Jan towards the low of 27th of Jan, if we draw an info line between these two highs and lows, then we see a correction of a little close to 16% in 16 trading sessions. Now this is quite a cut, this is quite a fall, which has led to a trend reversal for the sectoral indices, for this sectoral index. And if you look back past a year and a half, you wouldn't see this kind of a vicious correction in this sector. The last meaningful correction was around 10.5%, which took around 30 days, which is close to 1.5 months of trading. And it was a complex correction across multiple legs on the downside. So was to some extent this one, which was an 8% correction, after that a consolidation. But this is serious. None of these corrections led to a reversal of the moving average, but this one has. So the big question is, after this unusual 16% correction, is it a good time to start buying the IT stocks or not? Now for this, we are going to take a look at the CNXIT index from a different perspective. So let me try and bring in some perspective here. Well, what we are going to do is we are going to evaluate the CNXIT index with the global US dollar index. We will take a look at this ratio chart and try and understand the outperformance and underperformance scenario of CNXIT vis-a-vis the dollar index. We're going to do the same. Then next step would be take a look at the CNXIT index with our benchmark Nifty. The same ratio chart we will plot and try and understand the dynamics there. And from there, we will move on to taking a look at 8 individual IT stocks, small cap and large cap and relatively mid cap, smaller stocks combined, and try and figure out their supports and resistance. Again, by the way, we will take a look at the stock, that particular stock, vis-a-vis the benchmark Nifty. That is essentially the ratio chart once more. And then we will try and figure out the supports and resistances of those ratio charts. And all this we will do from an intermediate to long-term perspective. Please remember this. We will do this not from short-term trading perspective, from intermediate to long-term perspective. And we will be looking at the monthly and the weekly charts. That's what's in store for this video. I'll try and do justice to the fact that you're spending the time and listening to me here. So let's take a look at it. Let's now come to CNXIT versus the dollar index and CNXIT versus the Nifty, which is on my left hand side. We have the dollar index here, this one, and the ratio chart of CNXIT vis-a-vis dollar index. And on the right hand side, we have the IT versus the Nifty 50. I have normalized them by multiplying it with 100 so that the charts are normalized. Now let's take a look at, this is the daily charts. Now let's take a look at the weekly charts. Number one, the IT with the dollar index on my left hand side, this clearly shows the kind of outperformance. That is, if you had bought IT and sold Dixie, that is the dollar index, this is the outperformance that IT has given us. Now, a couple of strange things you will notice in this chart. If I blow out this chart, and bring in some old data, some really old data, you will observe something that in 99 2000, this one, the big bubble, you have the difference between, I'm plotting here the MACD, usual 13 and 21 difference I've taken. This was the spread between the 13 and 21 moving average, which was phenomenally high. Okay. Post that, a normal spread, which meant that the index is relatively stretched. Whenever the moving averages moves too much, it tends to suggest that that particular ratio is stretched, was essentially these highs, these areas. Another thing that you will notice, that once it goes stretched, relatively stretched, that is, it always created a divergence and then it gave the correction. It's not that you got a very strong reading and immediately it fell. No, we got a strong reading or an exceptional reading, then it will continue to drag itself up, it will create a divergence, and then it will give the correction. Every time we have noticed the same thing. This time, the difference has just shot up like crazy. It's phenomenal difference. We've never seen an outperformance of IT with the dollar index at this scale ever. And in this case also, we notice that from this point, it has gone further up, and to a lot of extent, it has created this divergence and this divergence, and now it's coming down. So it's playing out exactly the way it had played out over the last 10, 11 years, the nature, but the extent at which it has stretched itself, the 1321 moving averages has stretched itself. This one is phenomenally high. This is like a new benchmark. So bottom line, the IT index has created a setup based on which it has started to correct, and these kind of corrections can take the index and prices further down. So these are some serious levels, serious conditions from where the IT index is correcting. So we should consider this from a slightly larger perspective. By the way, on my chart, what I have is a simple EMA and 14 period RSI. I have my usual 13, 21, 34 EMAs for the short-term trend, and then I have this red line, which is a 55 period EMA. 55 period EMA on the weekly time frame, essentially looking at an yearly average, and I have the linear regression of the last 52 weeks. 52 week high, 52 weeks is a yearly slope. Now the linear regression will help us when we go to the stocks. It's maybe not so useful when we are looking at these two charts, but yes, you will notice the difference when we go to the stocks. So what's the story with the Nifty 50? If we take a look at the same behavior between the Nifty IT and CNXIT and the Nifty 50, then what do we see? Well, you will notice here very clearly that there was some crazy movement. Like, really, this is what bubbles are, right? Some crazy outperformance from the IT vis-a-vis the Nifty 50 back in 99 2000. This is the nature of a bubble. When people say this is a bubble, etc., this is exuberance, this is euphoria. So we need to, this is not a very true picture of price, right? And so we need to discard this to some extent and bring in some data which is more meaningful and trustworthy. And so if we take a look at this much data, and you will notice down here, this kind of level, this kind of a spread, the MACD value, whenever the spread comes to these kind of levels, let me mark this for you, when the difference comes to somewhat like this, yes, we do tend to see an intention of correction from the price. And in this case also, you'll notice what we saw with the IT-Dixie ratio chart is the moment it goes stretched, historically relatively stretched, It always kept on going up. It creates a divergence and then it gives you a correction. It goes stretched, it keeps on going up, it creates a divergence and then it comes down. This is by no means stretched historically, but then even if you consider this, it keeps on going up and then it comes down, right? So we notice the same thing here also, though there was no divergence, I'm sorry, but here, yes, this is where it goes really stretched, it consolidates and it carries itself further up and it has started to create some divergences. So not a bad thing in the sense IT vis-a-vis the Dixie index, the dollar index and the Nifty 50 from a weekly chart, means an intermediate to long-term perspective. The setup is such which can lead to further weakness. Of course, if you take a look at the daily charts, the perspective will be very different. You'll see some serious correction and you'll start to notice some sharp bounce back also. But that's not the idea. We're talking about a time frame of at least 5 to 6 months to a year, if not more. So in both these cases, we can see that the IT index has generated sufficient evidences on the charts which suggests that this can lead to further weakness. And if that's the case, then which are the stocks that we should look for, we should avoid, or then when the stocks hit their supports, we should buy? Before I take you to these 8 stocks, one thing you would notice that in this particular chart, let's say especially the IT with the Nifty 50 chart, you'll notice that since December 2019, the weekly charts have never slipped below its yearly average, this red line. It's never done that. That's phenomenal strength. Before that, every time we saw that divergence kind of a behavior in the past, historically, there was a tendency for this ratio to come to the yearly average and break below it. And at times, of course, stay significantly below. This is quite a underperforming stage for the sector. So bare minimum, we can expect that this particular ratio chart can come down to its yearly average and may rest close to this consolidation down here. So there is scope for further weakness, but it's a phenomenal trend. Now let's come to the 8 stocks that I've created in one chart, one template, and we'll take a look at it one by one. I have Infosys on the top left, followed by TCS, then Wipro, then HCL Tech. In clockwise order, Infosys, LTI, Mindtree, and Tech Mahindra. All of them are weekly charts, same parameters, same tools used. All of them are Infosys by Nifty 50. They are all ratio charts, not individual stock charts. This is not the chart of Infosys. This is a chart of Infosys on top of Nifty, normalized multiplied by 100. So we have all a normalized chart and all the 8 charts here. Now, of course, the goodness of the linear regression over the last 52 weeks clearly gives an angle of the rally. And you can see how TCS, this one, the second one, is kind of flattish in relation to the rest 7 stocks. So TCS is one stock which is slowing down. Slowing down for further gain on the upside or slowing down for fall? Let's try and take a look at it individually. So I'm going to spend some time with these individual stocks and try and make sense of these ratios. So prima facie Infosys ratio is phenomenal. So Infosys continues to be an outperformer, number one, no doubt about it. And we can clearly see that the kind of divergences that we spoke about before is evident here also, very, very clear. And these readings of Nifty, of Infosys with Nifty are pretty high. This kind of differences which we saw in the October 20, since then it has gone up and created these divergences for correction. These kind of levels are historical spreads differences for this ratio. Now, I definitely want to show you the monthly chart of this this ratio, especially in Infosys. I'm not going to do this for all stocks. Why? Because I want to bring in some perspective that Infosys in relation to Nifty has been kind of flat, completely flat, not much huge in relation to Nifty. Please understand, I'm not saying that Infosys during October 2001 to March 21 did not go up. No, I'm talking about Infosys in relation to the Nifty. So both of them have gone up, but the ratio has not done much. It means that outperformance was not there. Significant outperformance was not there. Now it has come out of this zone, which means that Infosys has started to outperform the Nifty by quite a margin after a zone of multiple years. This is, for a long-term investor, a serious long-term investor, this is like very good sign, very, very good sign, which means that one should definitely eye Infosys on short-term corrections to buy. Now, if you're a pair trader, that is, you buy the stock and sell the other one, then in this case, when we get a signal of buying, then we should look to buy Infosys and sell Nifty. That's a pair trade. But that's not the idea in this case. What we will be looking for is when it comes down further, the possibility of this guy coming down further is high. Again, the yearly average is down over here for this ratio. And so yes, these levels of 9.4, 8.9, 8.8 and a half for the ratio, so that I don't confuse you, is there. It can come down. Considering the breadth of the divergence that we're dealing with here, yes, it's possible that Infosys can underperform the Nifty going forward. And so your trade should always be taken from the stocks chart and not the ratio chart, unless you're doing a pair trade. So Infosys definitely stands out. So parallelly, what you should do is you should open the chart of Infosys, keep a close watch, mark the supports, etc. And once it starts to come close to your long-term supports, stabilizes, then only you should buy. This discussion will help you to rank them. So Infosys definitely stands out. TCS is not doing that great in terms of its ratio. Now, this is the monthly. Now we can see that the monthly is angling much better. But if you take a look at the smaller time frame, which is the last 1 year, we will notice clearly from the linear regression behavior, and that's why I've plotted the 52-week linear regression here. We can see this sideways movement. Again, what does this mean? This does not mean that TCS has not gone up. The stock has gone up, but when we compare it with the Nifty, it seems like the outperformance is kind of missing. But it is still in a decent trend. The moving averages are crisscrossing each other pretty bad. Of course, the divergence and the topping out all happened much earlier during October 20. Post which the ratio has kind of gone sideways. Not a very pretty looking ratio, if you ask me. Infosys stands out better. Now I can take this example. I can bring you here where we have this TCS on the left. This is the TCS Nifty ratio chart on my left, and this is the TCS chart, the TCS stock chart. Okay, so what I was discussing with you just before, if you take a look at Infosys in this perspective, and let me quickly mark the symbol also. Now, if you take a look at Infosys, let's say I'll bring a perspective. Okay, sorry. On the left hand side, I need to bring the ratio. So give me a moment. I can do it in front of you. In fact, it will be good for you to see how I'm doing this. I'm bringing the Infosys. I'm dividing it by the Nifty. Okay. And then I'm normalizing it with 100. So on my left hand side, I made a mistake. Sorry. Just give me a moment. I just synced symbol. So over here it will be Infosys. Happens. Okay, this is not a bad template. On my left hand side, I have Infosys vis-a-vis Nifty. On my right hand side, I have only Infosys. And so what I was suggesting is now we can clearly see the divergence on MACD, the divergence on RSI, the correction coming in, and etc., the levels. So don't be in a hurry. Don't be in any kind of a hurry to buy on these stocks right now, but get the levels ready. Take a close look at how the volume profile played out in the past huge rally that we had. And we can see from this particular volume profile, bit of volumes, pretty decent volumes at the level of 1660. But post that, I think a possibility of 1400 should not be discounted. So if this correction that we're talking about extends another leg on the downside for the next a quarter or 2 quarters, then we might find stocks relatively cheaper. And these are the levels if we find ourselves there. And these are corrections to the tune of what? Let me check. For another 20%. So net a correction on the IT index close to 25 to 30, 35%. That is where I think one should start to look for. And then there should be supporting evidences down here that yes, it's a good buy. So do this exercise when you start to buy, when those prices come, if they come. But based on the ratio charts, don't go for it. So this is TCS, which is not looking that great in relation to Infosys. Infosys stands out better. Then we have Wipro. Pretty decent linear regression slope, pretty decent rally that we had. This is the weekly chart. And do you see the same phenomenon? Do you again over here see that the MACD topping out, creating further rallies on the price, creating a clear divergences down here, which leads to this correction. And by the way, this correction has already taken itself below the yearly average. Okay, so Wipro is going through the correction, and this correction is definitely weighing the stock down. Daily charts will provide you a short-term bounce back anytime soon, but weekly charts are still down. The ratio charts are still down. Unless we see signs of bottoming it out, it's better not to. Now that I said signs of bottoming out, what do I mean? So essentially, what I would be looking for is slowdown of the correction. Okay, so you will notice again as it tops out, general tendency is there. That's the way it bottoms out also. It goes extremely oversold on the RSI indicators. The the MACD indicator starts to slow down, starts to create some peak and trough divergence, maybe some slant divergence, and then slow and steady it picks up momentum. So look for those signs, or else I think we can wait, especially if the moving averages are broken. For Wipro, it will be more like, it seems like it will be more like a further correction. HCL Tech, linear regression slope is okay, but then the bigger picture of HCL Tech's ratio chart, you can see this. It's kind of stuck here, but it's given a decent correction, a sharp correction. Last time the correction was of similar kind of a size, but which led to a pretty sharp bounce back. You can see the same phenomenon once again playing out. It rallies itself further up just to create those divergences, just to bring in, bring the MACD down, the slope, the neck of the MACD down, and then gives the correction. Similar story. I think this has some very strong supports. This ratio has some very, very strong supports down here. If this holds, it's good, or else we are heading for the weakness. Who's this? Tech Mahindra. Great run. Very, very big run. And this guy did not give any kind of divergence. This over here, let's take a look at the behavior of Tech Mahindra vis-a-vis Nifty for the last, let's say 10 years at least. So let's come to 2010. Okay. Now let's take a look at the MACD extreme readings. This, where I've kept my cursor, this one. This was in August 2009. We can see a similar kind of reading in Jan 2014, almost similar kind of a reading in April 2018, and now in September 21 and Jan 22. All of them, same story. You would notice that prices continues to go up after the peak. MACD continues to give the divergence, and RSI of course follows suit, and then the big correction. The behavior most of the time, I would say 8 to 9 out of 10 times, are very, very similar. This time for the Tech Mahindra, surprisingly, this guy has not created any divergence whatsoever. But of course, the entire pack has fallen. This stock has also fallen very hard. Still away from its yearly average, close to this triple moving average zone. This can surprise us with a short-term bounce back much better than the others. Who knows? But the fact that it's not created a divergence and still coming down, I have my thoughts. Of course, it's outperforming. So Tech Mahindra looks good, better than I would say Wipro for the bounce back, to play the bounce back. Mindtree, phenomenal. Look at the slope, look at the angle of the linear regression here. No divergence whatsoever. If we take a perspective of the last 10 years for Mindtree, we will see some serious outperformance coming in from this guy. Barely we can see, this guy is literally towering. The difference is literally towering the previous ones. Previous times, very, very similar. Again, every time the MACD was stretched, there was a divergence and then the correction. Nothing of that sort here. Nothing of that sort coming in for Mindtree. We can see the divergences with the RSI. We can see the RSI is dropping down, etc. But I don't think this guy is going to correct significant from here. I don't think so. Maybe it will stabilize. You'll have to go to the chart of Mindtree, draw some volume profile, figure out some zones of supports, etc. But we are here to point out the outperformers which we are going to buy later on. LTI is similar kind of a story. We have a divergence on the RSI, but nothing on the MACD per se. So this guy can continue to pick itself further up. So LTI looks as good as Mindtree. Then we have Infosys. Now Infosys is slightly slowing down, but still as good as I would say Mindtree and LTI. There's no divergence on the MACD. And every time we see that before those serious correction, it tends to create those divergences on MACD and then correct. And so I think, considering these 8 stocks that we spoke about, the ones down here, the Tech Mahindra to Mindtree to LTI to Infosys, I think these are the 4 stocks you can start doing your work, your homework on the individual stock. The bigger ones, Infosys from a very long perspective, I think stands out great. So does HCL Tech and Wipro, and so does TCS, but I would say it will be definitely Infosys. So if you're interested, if you like to buy stocks when they correct, and now that the IT stocks have corrected, I would suggest that make a list, and I would say Tech Mahindra, Mindtree, LTI, Infosys, then the large cap ones. I've spoken for quite some time in this video, but I'll try and do this for, let's say, Mindtree here for you, and show you what exactly am I suggesting. So Mindtree divided by Nifty, do that and normalize it. There you go, that's the left hand side chart. Okay, on the right hand side, only Mindtree. That is Mindtree, the stock. Fine. So now that we know that Mindtree had a great run and it has outperformed, it's coming off. We can see the correction here on the Mindtree. This is Mindtree vis-a-vis Nifty. Now what I'm requesting you to do is blow out the Mindtree chart. Maybe you need to go to a log chart. In this case, we are looking at the weekly. Okay, I'm going to hide the linear regression, and I can see that the stock is in this kind of a corrective mode. I notice that this is the big move that the stock had gone through. I'm using Heikin-Ashi candles here just to slow down. I don't want to get carried away by raw prices. And big amount of volumes happened down here. Levels of around 21, 27. We're dealing with 4,000. It's going to half. Is that what we suggesting? No, the volume profiles are just suggesting where the heavy volumes had happened. That does not necessarily mean that it has to come here. Let's take a look at the daily charts once, and yes, let's just refresh this. Yes, so we can see that how this daily chart has now moved into a downtrend and giving us a bounce back. And from the perspective of the daily chart, such a beautiful rally. It's kind of difficult to find zones of consolidation wherein the stock generally tends to find support, right? So would say something like this, something like this. I'm essentially marking the zones of, I'm not going to draw Fibonacci right here. By the way, there is an auto Fibonacci. I don't know if you're aware of it. TradingView has an auto Fibonacci retracement, which you can just click on it and it will mark it for you. Nice, Nifty, very clean. And but I'm not going to do that. I'm not going to go any kind of esoteric analysis here. But this guy can come down to the levels of 2800. This is the first congestion. I can see previous highs here. So let it unfold. And to sum it up, this video, the objective was, is it a good time to buy the IT stocks? I will say no. I will say that we should wait out a little bit further. Maybe the month of Feb, just to check. Short-term bounce backs are very, very likely. So if you want to play out the short-term charts, it's okay. But our perspective is multi-months. And the takeaway from this discussion would be Infosys, LTI, Mindtree, Tech Mahindra, Infosys primarily are the ones which seems really good. And we need to mark long-term supports for these stocks and slowly, in a staggered manner, start accumulating them. I hope this discussion makes sense. Let's see what's in store. If we see further corrections later on, I can do a part 2 of this video. All right, trade well today and take care of yourselves.